Hello everybody, welcome back to another video. Today we're going to be discussing whether Bitcoin is going to stick to its 4-year cycle and top this quarter 4 of 2025, or if we're going to have an extended cycle and top probably somewhere in 2026 or 2027. Nobody even talks about when Bitcoin could top if it has an extended cycle. That's not also something we're going to study. We're just going to study basically if we're going to have an extended cycle or if we're going to end this quarter. All right. So first thing, what we should look at is the fact that this S&P cycle looks a lot like the dot-com bubble. All right. And if you take a snippet of the price, say from here to there, right? Take it from here. It's not going to match. I'm just, this disclaimer. Something else is going to match that's going to a little bit shock your mind. Then we see that this cycle is a little bit faster and more aggressive. All right. But if we change our perspective just a little bit, we might find that it does look like the dot-com bubble. All right. And this hump over here corresponds to this hump over here in a way, right? History does not repeat, but it definitely rhymes. All right. Just remember that history does not repeat. It rhymes. And that matches that in a way. But the dot-com, crash, or like two humps, two mountains, they were relatively on the same level. That's the first thing we can see. They were also more elongated or scaled on the x-axis, That's what we can see, right, from these two humps. But if we just focus on this part from here, then we might actually learn something about what is the stock market going to do and what is Bitcoin going to do in reaction to the stock market. Now, the reason why I'm not analyzing Bitcoin right here is because we already did that in a previous video. And Bitcoin does have a short history, right? But just like Bitcoin has a 4-year cycle where the top happened. Let's lock that. Here, 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 and here somewhere maybe, or maybe further. The stock market also had a phase where it very consistently followed the 4-year cycle, which is that phase. What I believe is Bitcoin is maturing like the stock market is, right? So the stock market is having now elongated cycles, which we're gonna check as well, because it has matured, right? But Bitcoin is still in that phase, even though it's more aggressive. But the stock market had a 4-year cycle. So if we check the 4-year cycle of the stock market, check that in 1968. I should have probably locked it. 1972, 1976. Here's 1980. And sometimes we start to deviate from it. But for a lot of time, here 1961 and January of 1966, so it's around the end of 1965, which is around a 4-year cycle, right? So why don't we study the stock market to understand what Bitcoin is going to do, right? This why, let's take a snippet of the stock market and see if the stock market is going to continue going upward or stagnate or go downward. And in any of these situations, what did Bitcoin do in reaction to that, right? And then we can figure out if we're going to have an extended cycle, like the stock market always does, sometimes, or we're just going to end a 4-year cycle. So if you take that snippet right here and just focus on the very similar part to the current cycle, then again, we do see very, very large similarities. you can see the same upward movement. We stagnated just at the right time when we deviated then, but we caught up. That's what rhymes mean. We deviate, but we eventually get on course, right? Deviation upwards, here deviation downwards, but then they meet in the middle, deviation upward, deviation downward, but then meet in the middle, deviation upward, consistent trajectory, and then meet somewhere in the middle, right? And we just keep doing that. You know, they keep dancing around each other till they always meet in the middle. So they do have a similar trajectory and similar patterns, right? Just sometimes things can be different. That's why we deviate above and below that line, but we eventually follow it and eventually break below it, right? So I've made a lot of good investment decisions, taking snippets from history and matching it to exact prices of today. And 60% of the time, maybe more, they do end up turning, you know, similar to the snippet, you know, the actual live price, if there are, you know, large similarities and economic conditions actually match. Now, I do not know if the crash is going to be like the dot-com bubble crash, which is, you know, was very long, 3 years, and also like 1,000 days, almost 3 years, and you did go around like 40% down or something. So if we measure it from the high to the low, it's 50%. That was massive. That was, you don't want to be holding any asset for 3 years that goes down for 50%, right? You want to be shorting that asset instead. So it's important that we know the direction. As the snippet shows, we may be in time for a stagnating period. All right. So what can that tell us about Bitcoin? Right. Okay. If this says the stock market, also on previous research that we did on old videos, we discussed some factors that can actually allow the cycle to end around this quarter. You can see all the bear markets that happened before, and those gray ones. You see this May 2015, December 2021, and October 2007. This is where the stock market showed real weakness, large weakness. By the way, it did not follow the 4-year cycle if you measure it from there, but if you measure 2007 to 2011, then it did follow kind of a 4-year cycle. We did see weakness around that time. Similarly, you know, 4 years later, it's 2015, you did get some weakness as well. But I do not know if I want to call that a bear market for the stock market, because it was a very short period. That was like 150 days, just to put it in perspective. If you go to Bitcoin and you know, look, we don't call that a bear market because, well, it wasn't so long, right? It was also around 150 days. Here we went down around, you know, like 30%, and in that period we went down, I think, around 20% or 25, something like that. Yeah, 21%, right? So I don't call that a bear market for the stock market, but it was indeed a bear market for the crypto, right? If you can extend the line here, then you can see that we were entering the kind of the bear market. But all right, that's a very speculative thing to say. So what about we just measure other areas where we actually can see a full bear market and see where the stock market had done during that period, right? So if we start from here, then you can see the stock market in 2021 had a bear market, but also did crypto. All right, so when the stock market has a bear market, crypto does as well. That's what we can learn from that data point. And then if you look just a little bit before February 2018, that was a unknown bear market for crypto, right? So the crypto bear market started around December 2017. So, but the stock market didn't have a bear market, right? I mean, you don't make higher highs in bear market. I mean, you did have a period of slowdown or weakness, but I wouldn't call that a bear market, right? It was an elongated period of accumulation, or you can call it distribution, but that was like a 1 year period. So it's very long. It was, you know, people were accumulating and distributing there. The price wasn't going anywhere, but that's not what a bear market is. A bear market is a huge percentage decline relative to the asset price, and, you know, an elongated period of pain where that decline happens. Here, if you sold it February 2018 and then bought again, you know, 1 year later, you know, February 2019, you'd have been good. You would have been fine. So if you stuck to the 4 year cycle, you don't have lost a lot of you know, profits to be made. Instead, you would have allocated that capital somewhere else and got an interest on it, or started a business, or done something with it, right? Maybe bought some calls and puts and played the market as it is, but not that you stayed invested, right? So bear market or not, the 4 year cycle for the stock market does actually work in a way. Goes 2021, go down, 2018, do nothing, but crypto definitely went down. All right, so even what that tells us, what we learned from this data point, even if the stock market doesn't have a bear market, but the stock market shows some sort of weakness, then Bitcoin and crypto asset and riskier asset will sense that weakness, and they will have their bear markets. This what this tells us, from what I see, with no bias, right? One data point is not in. Okay, let's look at another one. Let's look at the 2013 bear market that happened here, right? 2013. So as we can see, the stock market did not have a bear market in that period, right? It did not. But it did not go much higher, right? It was followed by a period of stagnation, but it's hard to call that a bear market. The decline for a bear market needs to be like 25%. That was like 15%, all right? I understand the pain period of doing nothing, just sitting on your, you know, funds until we finally break out was 550 days. After 550 days, you were 2.5% up. So that's just an elongated period of stagnation, or not growth, not decline, but not growth, at least for the stock market. But crypto has sensed that way before the stock market did. And it has launched to the upside with its thrusters way before the stock market did, because it's a riskier asset. I would say similarly to the, you know, third cycle, the 2019, 2021. We we used our thrusters to jump ahead. Yes, we crashed back, but we did sense strength before the stock market. I would say similarly for the 2025, right? We did go much higher than the stock market for such time, but now we've been declining and the stock market is just doing higher highs. Why? Because I believe crypto does sense some weakness in the economy, some weakness, some troubling time, and people are just more quickly afraid to pull out their money. But the stock market can handle some punches before it falls down, because it's a much bigger asset, more mature people play with it, a large amount of funds. It's not easy to sell and buy these funds if you have a lot of, you know, a lot of funds to worry about. You're not going to be selling and buying every moment, right? Pension funds, you know, some people just invest $100 every week or whatever, and just never sell it and stuff like that. That can keep the price up for higher. So that's for all the periods we have studied right now. What we can say is that the 4 year cycle for the stock market recently has been relatively correct. See here, 2017. Here, let's look from the start. So this was after a very elongated cycle with a bubble and 3 year bear market. I don't think the cycle was just elongated because of the bull market that was crazy, but it was a 3 year downtrend, all right? So it's a little bit different. If we start from here, October 2017 to 2011, that's 4 years. But here you did have a larger downtrend than, an uptrend, still a 4-year cycle. May 2011, 2015, that's also a 4-year cycle. As you can see here, those gray ones, I don't believe they were bear market for the stock market, but I believe they showed weakness and therefore translated that to a crypto bear market, right? It's just that means weakness for the stock, bear for the crypto. All right, that means bear for the bear for stocks, bear for crypto, right? So yeah, 2015, 2018. Here we ended a little bit late, right? So you can call it we had ended 2014, right, for the crypto market, and therefore it was on time for the crypto market. But for the stock market, we actually ended a little bit later, a few months later. This way, just like a 3.5-year or something cycle, but nevertheless. 2018, 2021, that's 4 years, and what's coming up is 2025. That might be a 4 years. And not only here, where you see the 4 cycle here, we have not followed it. Here we have followed it quite, sometimes even ending early. Here we have followed it to the T, ending early, ending late. Here a few months, and ending early. Usually we're more inclined to end early than late, except like in a few situations. This is a different time in the stock market that is very hard to translate to what we're studying. But here basically had just very long bear markets and lower highs, and just you had bull markets, but they were not as strong as the bear markets, right? That's not what we want to hear anyway. So with that said, you have one fact. So we're trying to add facts to the we're trying to make an argument here. We're trying to get fit all pieces of the puzzle to see our final decision, right? So one thing is, if we take the dot-com bubble, bam, it very matches. It shows some weakness might happen here, and from what we know now, if the stock market start to show weakness, crypto will go down. You don't want to go out of crypto after the stock market shows weakness. You kind of want to anticipate that. That will be the best scenario, right? But if you just want to wait a little bit longer to see the weakness in the stock market, then that could also be a good strategy, as long as you're slowly exiting or slowly entering your position, right? So that's one. Two, what we're going to talk about is the stock market divided by the world money supply, M2 supply. Another thing that worries me is that the fact that we are entering the zone the zone right here, which usually means bad time for the stock market, right? Because we did that during the dot-com bubble, and from what we see, we do have a very, not that one. Oh, we don't need a bull market support band. We do have very huge similarities with the dot-com bubble. I think this was the tech bubble or silicon bubble, or whatever you want to call it. Nvidia, Apple. I don't care what you give it a name to it, but there will be a name. The last period was definitely AI bubble, from here to here, but this is some sort of thing that looking a lot like the dot-com bubble that I do not like. And the fact that we are near the end where this is just looking too large, I also don't like that, but I doubt we would go that low. It means history rhymes, does not repeat. We might not end that way. We might end with just some weakness. We might end with just half the drawdown, the drop, and then switch to some different pattern or something. That will need a video on its own and an analysis on its own, and a whole topic to understand, and a whole study and research and statistics to understand how the amount of drawdown or the period that it might be. We just know there may be some stagnation or drawdown. That's all we need to know to say I'm a stay invested in crypto or I will not be, right? That's the question we're trying to answer. So as you can see here, we're also in a dangerous situation where everything matches to the T, even this right here matches this right here at the same exact time to the same exact two levels that I do not like, to see if I want to be long. And therefore, I have sold everything, almost. I'm 10% invested in Bitcoin only, 90% in USDT, and probably my Bitcoin percent is going to drop down. And probably, if I see more signs, and if the trend starts being my friend, if I see confirmation of trend, like a drop down, I'll show it very fast now. If I see something like, okay, if I see something like that, right, we bounce here, but we stop here, I'll take my short here, and I'll just write it down. And of course, I'll just add to my short incrementally. I don't go all in at one time, I go incrementally all in. Incrementally, that means if I want to invest X amount of money, either upside or downside, over X amount of period, then I would, you know, take the amount of money X and Y. The amount of period is Y, the amount of money is X. I would go X over Y, and I would know my weekly amount that I need to invest, or daily or something, it doesn't matter. But just not all in, incrementally all in, and incrementally all out as well. If I see something like that, I'll probably go like short on right here, somewhere here, right? But just important to not be too bearish, okay? Yes, the facts are showing that way, but the facts can always change, and there will always sometimes be new facts. Therefore, one thing I can see is, you know, we probably, I don't know if we go lower than that, but probably go down, up again, do that, go have one more high, almost 149 or something. I don't think we're gonna touch 150k because everybody wants 150k, so probably gonna psych people and go 147 or 149, and then maybe the bear market will start, something like that. But this is not on timeline, right? This is all gonna be so much faster, right? We're probably gonna end in like December something here, yeah, if not already done, something like that or something like that. That's the good case, that's the bad case, and there's also a medium case where we just, you know, go around this zone like that and go inside the bear market, but just like, you know, mini bear market like this, something, right? And then we just like, oh, showed weakness like the stock market, and we're on our way into 2027. That's the good scenario. Good scenario, perfect scenario, bad scenario. Depends on what way you look at it, right? That's probably for you. For me, this is my best scenario. You can make money on the way down much faster than the make money on the way up. I don't know why people are so stagnating over just up and up, and no, you should be like, what's the direction? I'll bet on the direction. I'll bet on, I'll go with the winning team. I don't care if you go up or down. I'm gonna just want to know where you're going. All right, just tell me where you're going and I'll go with you. I'll buy you or I'll sell you, it doesn't matter. I'll make money up or down. You see, forget the idea that you can only make money on the way up, because you can make so much more, okay, not so much more money, but money faster on the way down. And there are some safe strategies. So let me know what you think of this video. Please like, subscribe, and hopefully I'll see you next time. Peace.